The first category of the entries is after the breakout happens when a storyline starts, right? And then we're going to learn how to trade with the storyline using the double confirmation entry or confirmation. So we're going to use the continuation with the storyline, and then we're going to have a lower time frame confirmation and another way to enter that you can combine with the continuation. And then we're going to learn how to enter using the engulf, the breakout pullback entry type, not the Euro USD type. Okay. And then we're going to learn how to enter against storyline using two entry types. You can use the DC and the MTF entries using the higher time frame. Okay. After all of that, we're going to go to the EC MTF. Okay. A way of scalping and a deeper understanding of the multi-time frame. And by the end of the session, we can go through the Euro USD one. Okay, so everyone here, everyone ready? Must guys be prepared for today's session, innit? All right, so let's just do a quick recap of what we did yesterday. We talked about the CC. The CC is basically a V, a gap, a QM, an A. It's whatever type of level that has a rejection on the same side of that level. So basically, if this V level is for the buys, you would want a rejection and a body closure with a buy, right? So when price pulls back, it can give you a confirmation for your entry right here. Okay, that's the CC. For the DC, it's against the CC, right? You would want a rejection against the direction of that level. So if the level is basically for buys, you would want a bearish rejection. Let's take a look at an example here. So you have this gap right here, a bullish rejection, right? You have a bullish rejection here. So that is the DC. And we talked about the storyline. How can you basically know what's the current storyline of every market? You just go to your chart. The first time frame you're going to open is going to be the daily time frame, right? You're going to start by looking at the last candlestick that finished forming. So this one is still forming. We still have 1 hour, so it's not valid yet. The one before it actually finished forming. So what you would want to do is look actually at Pepperstone first, okay? For a storyline, you look at Pepperstone first. You look at the wicks, the bottom wick and the top wick of this candlestick, if they rejected any level. And the way of doing that is by marking a simple box on the top wick and the bottom wick, right? And then you drag it all the way to the left, looking if there are any levels that we rejected. So since we have a bullish candlestick right here, we don't really care about this rejection from the top. We know that it's not bearish from this wick right here. If it's bearish, it's going to be from above. So you delete that box. Now for the buys, look at this wick right here. What levels did we reject on the left? So going back, we have this level that we rejected. Okay. Did this level got used more than 4 times? So you'd want to count 1, 2, 3. This is the 4th time. So this is a valid level, right? So we have the rejection here. You'd want to go to the H4. Look at the last A level or V level that got created before the touch. So the touch is right here. The last A level is right here. We did not break it yet. So the breakout counts in the first day of the rejection or the second day. And by that, we can't really identify what's the current storyline from this candlestick. So what you would want to do is you go back one more candlestick. So you have this one right here. Did this wick reject any levels on the left? Yes, it did. So you have a QM that got rejected right here. And that is a daily reject daily. You go to the H4. The last V level that got created before this touch is going to be right here. Okay. And by that, we started our bearish storyline. So breakout, and then price started melting down to the next daily fresh levels. You can have this one, you have this one, right? You have that one. Okay, this one did not get touched yet. You're gonna have some on the left. So the focus, your focus should be on the recent leg of price key levels. Okay, I don't want you to go always to the very left. Just focus in here. If you can't find the levels that price are reacting from, then you can start going back. Okay, now the trades with the storyline are going to be, okay, just give me 2 minutes, I'll be right back. All right, so with the storyline, you can have many entry types. The first one is the DC candle, right? Yes, the recent storyline for gold is bearish. You would want to look for sells more than buys. Okay, how do you take sells? So the sells that you can take, okay, sells that you can take, first type is the breakout entry. So the breakout entry consists of H4 breakout and then H1 refinement. You have daily rejection. And then you have the H4 structure approaching that daily. And then when it touches, you look at the last V level or for sells or the last A level for buys. Once it does the breakout and the storyline is confirmed bearish, then what happens after a breakout, guys? A pullback happens. A pullback to where? It can be just here and then go down. It can be to the QM and then go down. It can be to the last resort level. You can call that the last resort level. Some people call it apex, whatever you want to call it, okay? So that's the last level, okay? Now, how do you know which level is going to hold and which level is going to give you a scalp? Now, in this zone, okay, before the breakout, you can have this RBS, okay? RBS, I do not use it only if I have the DC, okay? The double confirmation candle. We're going to go through that here. So the QM and the apex, or basically the last resort level, just take an instant entry if this is fresh on H4 and H1, basically the same area. We talked about the refinements is when you have multiple levels on the same zone of the both timeframes. So if this is fresh on H4 and fresh on H1, just put an instant limit after the breakout and hold it for a swing where? To the next daily, right? We'd want to hold it to the next daily. You don't want to TP at 100 pips or 60 pips as a scalp. Also the apex is 100% going to give you a swing if it reacts, obviously, because the win rate of this apex thing is 90%, so it fails once per 10 times. I'm going to give you an example here. So what do we have here, guys? We have a daily reject daily, right? So daily rejecting a gap. And then when you go to the H4, we touched right here, okay? Touched right here. The last A level that got created before the touch is right here. Did we break that? Did we reject the daily? Yes, we did. So this is the pattern. Boom, breakout. Now the pullback is going to be where? To this zone, right? You can have something like this, small reaction, then boom. Okay, how do you take advantage of all of these setups? You can take a buy here, buy here, buy here. If it is a gap on the recent leg of price, just TP at either 60 pips or 100 pips. It depends on the momentum of the lower time frame. Okay, the momentum of the lower time frame basically is how M5 or M15 moves away from your level. So if you have an H1 entry here or H4, if you check your M5, it is choppy, consolidating before it actually leaves, then TP at 60 pips, okay? If the price leaves so fast, then leave the TP for 100 pips. This is only on the gaps after the breakout, okay? Note that, the gaps after the breakout. The gaps after the breakout, okay? So for the QM and the apex, it doesn't matter if the momentum is slow, if it is fast, that will just determine how fast you're gonna put your break even, because if price leaves your level so fast, you can put your break even at 50 pips, 60 pips, but if it is so slow, you can just put break even at 100 or 80 pips, okay? So here, breakout, pull back to where? The zone, this zone. Look at how price here reacted. It gave you a short-term buy from where? It's not this QM, because this QM is not fresh. As you can see, it is wicked right here, okay? Look at that. This level is wicked right here. You don't want to take the buy there. Some of you would tell me, but we have a CC. Well, the CC is only used on the refinements. It's not used on the main time frame. So if you're looking at an H4 level and you want to look for a CC, it's going to be at H1, but it's not going to be at H4. H4, we don't use the CC in it. So this reaction actually came from this gap. Your stop loss is going to be 30 pips, depends on the momentum that's going to determine your TP. But here, it actually went more than 30 pips. Why? Let's take a look at the lower time frame, which is the H1. Okay, when you go to the H1, what do you find here? You find a gap from the previous leg of price. Now, the previous leg of price gaps are not good to use. They are not, they're basically valid, okay? But if you have a better level for refinement, take the better one. So let's say, for example, you have, we just use logic here. Think about it, guys. Take a look at this. So this is a V level on H4, right? On H4. And it has a wick, a big wick of, let's say, 70 pips, just like in this example, right? If you go to H1, on this wick, or basically the same level, you find something like this, a gap. And then you find an A level, then a V level, and then price goes up. So this is from the previous leg of price, not the recent one. The recent one is right here. This is on the previous one. What do you prefer? Just use logic here. Do you prefer taking this gap or the fresh A level in here? Okay, just think about it. Which one is better looking, or do you look at it as a better setup? Obviously, the V level in here. Second of all, the previous leg of price gaps are very, very weak. You don't want to take that. Also, if your H1 has a big wick that is bigger than 50 pips, you would want to refine it to M30 as well. So when you go to the M30, you can basically look at another setup. So let's take a look here. So just give me a second. Apologies for the pauses, guys. I'm back. So as I was saying, if you have an H1 that also has a big wick, you also should refine that to the M30. I'm gonna just recap that. So the H4 breakout, pull back to the gap, you go to the H1. So on the H1, you see that there is a gap on the previous leg of price. But here we can see that we have a V level that looks better, right? Measure the wick. The wick has 66 pips. So this zone is my zone of interest. But since it's big, I would want to refine that to the M30. So when you go to the M30, you can take that, okay? You can take that, and it also has more than 30 pips. So if you just buy there, let's say, for example, you bought here, okay? You would want to put your stop loss at 30. here, it would basically hit it, right? That's unfortunate. But I think on Pepperstone, it was different. It was so different. So let me just take a look at that. It's actually the same. Let me just measure the pips again. I remember myself taking this trade and it went up. So here, it would basically hit your stop. At the same time, you can see that there is a DC, right? What is a DC? I'm going to explain that again. So a DC is simply when you have a rejection against the direction of your level. So you see this level, it is for buys, right? So if this level for buys, then the rejection should be bearish. So as you can see here, you have a bearish rejection. So this bearish rejection gives you a valid reason to buy on the same level right here, right? This is the level that you would want to buy at after the DC, okay? So yeah, that's the first buy. And then as you can see, you would want to check the lower time frame momentum. If you go to M15 or M5, for example, here, let's say after re-entry, price took like 1 hour and a half in order for it to went up more than 50 or 60 pips. Okay, that is fine. Okay, 1 hour and a half is good. That means you can hold the trade. But if it took, let's say, more than 3 hours and price is still choppy for this much, then just TP at 60 pips. Okay, so yeah. And then what did price do? The gaps, as I said, they never go for swings. So price went up, and then what levels do you still have? You have the apex here, right here. So you'll find that to the H1. You check if the H1 has a CC or it's fresh or whatever. Price goes down there, and that's where you take your buy. So as you can see here, the apex and the QMs always gives you big buys. So if you held this for just for 4 days, you would have 900 pips, but your logical target should be the next daily because you're in a bullish storyline anticipating the buys to the next daily level. So your buy from here, right? So since storyline was bullish, your buy from here should end at this level right there. Okay. And you should be so confident about it because the storyline rarely fails. Okay, guys, rarely fails. Yeah, so your TP should be there. So how much is that? That is going to be 400 pips in just 4 hours. Okay, as you can see there. Guys, any questions for now? If everything is clear, let me know in the chat. Amazing. So these are the types of entries after a breakout happens on the H4. All right. So you have a breakout, pullback, gap, note for swing, a scalp, 60, 100 pips, QM, apex. You look if the time frames both are fresh, and then you would take your setup to the next daily level. That is it. Now, the second entry type is going to be with the DC. So it is very, very simple. You would want to take 2 time frames. So either the H4, H1 or H1, M30 or M30 and M15. My favorite combo is H1, M30. Does that mean I neglect the H4 and H1 or M30, M15? No. If I have a setup on my favorite time frame, basically H1, M30, I don't look at the other time frames. If I don't have a setup forming there, I always have my eyes on the other time frames if they give me a setup, right? So how do you trade the DC? As I said, rejection against the level. So the level is for sell, rejection that has a bullish candle, and then you put a limit, boom. So you just do this simply with 2 time frames with the storyline. you can also do it against the storyline, but the only difference is going to be at your TP. So here, let's take a look at H1. These levels that I marked are my entries for certain DC setups. So let's take a look at the first entry. So here, after I had my daily reject daily, reject daily. So you go to the H4, you can look at the last V level that got created after the touch, before the touch. Once it got broken, then I started looking for sells. So when you go to the H1, what do you have here? So if you would go back, or just imagine that this candle and the next candles does not exist, you would have a fresh A level in here. I can't use the backtesting tool and have the premium trading view. So here, this is a fresh A level. If you just look at it like this, okay? This is a fresh A level. You would want to go to M30 and look for your confirmation. So here, what do you have? You have an A level that is also fresh on M30. This is the DC candle, double confirmation candle, right? After this rejection. And then you put your limits here. After you put your limit here, price tanks down, right? Price simply tanks down. Now, your stop loss can be just above the wick of the DC, or a fixed 30 pips, as you like. So price went down. After that, boom. Now, how did I get my second entry? So I think I got this one on H4. So here I have on H1, I see there is a DC candle right here, a bullish rejection against the gap, and then you'd want to put your limit. But I don't know which time frame is this combined with. I'm 30. Not really sure about that. Not really sure why I marked this one. Don't even remember taking a trade there. But yeah, for the sake of the example, let's just pretend that there is an H4 here, and on the H1 is your confirmation. So yeah. For the next one, it is always the same thing, right? Here, what do I have? I have an H1 gap, okay, that is bearish. So I go one time frame lower, I'm 30, look for the DC candle, which is this one, right, on that H1 level. And then you would want to put your limit here with stop loss above or 30 pips fixed. It is very, very simple to use the DC, guys, okay? Also, there is one scenario that you can find. So this is your H4. And this is your H1. What are the possible combos that you can find on these two time frames, or whatever two time frames? It can be H1 M30, as I said, or H4 H1 or M30 M15. So the possible valid setups that you can find is gap, okay, gap on H4, gap on H1, as long as the both time frames are fresh or the second time frame has a CC. Now listen to this. If your H4 is fresh, say this is fresh, and this one has a CC, right? Let's say this is bullish candle. You can use the DC on the CC level. What do I mean by that? Take a look at this. Okay, we just fix that. So here, you have a CC. When price comes back to your defined H4 level, I'm not using the H1 alone. Use it with a bigger time frame or a lower time frame. Now, the CC is only valid on the one time frame lower. So if it's on H4 level, the refinement is on H1. Price gives you a bearish rejection, which is the DC, right? Now, you can put your limit, price goes there, and boom, it goes up. By the way, you can also use this on M15, M5, but I personally did not try it enough there to give you and basically review or about this time frame. Okay, so I never tried it. If you try it, then let me know. Okay, so yeah, do you guys have any questions? Now the TP with the storyline is going to be at 100 pips minimum. Okay, with the storyline, 100 pips minimum. If the momentum is fast, TP at the next DC. right? What do I mean the next DC? Since the next setup can be also against storyline, if you take a sell based off of a DC and the momentum is fast and it goes more than 100 pips, you can TP when you see a DC for buy, for example, a bearish rejection, and then you would want to put a limit for buy. When it touches the buy, you can close your sell or just leave 0.01 lot, okay? And then price would want to go up, okay? So then you TP. But if the momentum is slow, it is 100 pips minimum, okay? If it is against the storyline, it's the same thing with H4 breakout zones, okay? It is the same thing, basically 60 pips or 100 pips. That's simply it, okay? Now you have a certain entry that is way simpler, which is called the continuation. This is only used with the storyline. You can't use this against it. So if the storyline is bearish, you look for an H4 fresh level, the closest H4 fresh level for sell. Now, you can't use the RBS or SBR in these examples for continuation. The SBR or RBS, resistance become a support, support become resistance. You cannot use that. You can only use the A, V, and gap and QMs with your storyline using continuation. Now, once you find your H4 fresh level, now ask yourself, what's the closest H4 fresh level for sells in here? It's not this one because we still have 39 minutes for it to get created. So the next one is right here. Now, is this a valid one? No, because it is an SBR. So this is our fresh H4 level. So if you go to the H1, you can find that it has a CC right here. Look, gap that has a CC. Is this valid for sells? Yes, it is valid for sells. Now, if price goes in there, are you going to sell instantly? No, this is a continuation entry type. The first type, you can use a DC. Price goes there on H1, price goes, and then it goes down, right? So that's the first type. You can never enter instantly unless it is a breakout entry type. Now for this certain entry type, lower time frame confirmation, you're going to use the M5. You have 3 types of confirmation on the M5. Now, the first one is very simple. It is a breakout. Now, breakout on M5, pull back, then entry. Pull back to where? Pull back to the last up candlestick before the down move of this one. So as you can see here, the breakout happened here. This is a bearish move. Basically, you have red candles. So the last green candle is your engulf. Price pulls back and then enter. Where's your stop loss? It is basically this range, okay? The range of the breakout. So from this low to this high that got broken, you copy paste that above your wick. If there is a wick right here, you can just put it there, and that is your stop loss. So stop loss should be above that box, okay? Now, that is the first confirmation. The second confirmation is a simple gap break, okay? Simple gap break. So you have M5 right here. If M5 gives me a bearish move and breaks this gap, I would want to wait for a pullback to either this gap or the last resort level. How do I decide? If the breakout of this gap is so close to it, let's say, for example, the difference between this gap and the break right here is less than, I don't know how much exactly, but you can see that with your eyes. Let's say if it's less than 10 pips, then you would want to put a limit right here. Because since price closed here, it's so close to it, it's most likely not going to do this and then go down. It's going to the last resort level and then go down. If the breakout of the gap is way too far, then put a limit on the gap and then sell. Now your stop loss here is going to be 30 pips fixed. The third confirmation on the lower time frame is going to be the decisional level. What's the decisional level? So you have a gap, but it is going to be broken by another gap. Price is not going to do this. It's going to create another gap right here, and that gap is going to break the previous gap. This is the decisional level. Where do you enter? You enter right here with 15 pips stop loss, okay? This confirmation is pretty solid. So price pulls back to the gap, that broke the second gap, and price goes down. There are certain traders I know that they just use this on the higher time frame, and that's all they do. They look for a gap that broke a previous gap, and they put a limit there with 15 pip stop to 15 TP. So here your stop is going to be 15, and your TP is always going to be the same. It depends on the momentum. 60, 100 pips with against story, with story is going to be 100 pips minimum. Okay. So yeah, now what we have left is the engulf, breakout, pullback, entry. How do I identify your engulf? And then we can go to the ECMTF. But before we do that, I want to read the chat. I see some questions here. When we use H1 M30, but there is also M15 key level, do we monitor the M15 instead of M30? Well, it really depends on what time frame you want. If you want an early entry, you can use the lower time frame, basically M30, M15, right? You can do that, but it's always your choice. There isn't a certain rule that says H1 M30 better than M30 M15. If I decide to wait on H1 M30, I'm just gonna wait for that. What entry type do you prefer between combos and H4, H1 fresh level after getting the H4 breakout? I don't really have a favorite entry type because I'm the type of trader of whatever the market gives me, I take. Sometimes you can see my H1 chart is full of entries simply because that day I got all the types of the entries. But what I personally suggest, if that's the question you'd have asked me, so if you personally ask me, okay, which one do I focus on? Which one do I use? I would personally tell you to focus on continuations for prop firms, okay, and the DC. Also, I would tell you to not look at setups against the storyline. So follow the storyline, use the DC, H1 M30, okay, and the continuations. So the continuations using the lower time frame confirmation. Besides that, I don't want you to use the ECMTF that we're gonna go for right now on prop firms because you're gonna have a lot of entries, messy. Some prop firms have tight rules. Okay, so ECMTF is for flipping small accounts. So you take, let's say, 100 entries per day. You can do that because since we're gonna be working with M1 and up, like all the time frames. But yeah, so that's what I personally suggest you go with. Don't go against the storyline or prop firms. Okay, just be patient, wait for your DC, your continuation lower time frame confirmation, and just go with that. All right, so yeah, so what is the engulf BPE? Some people actually